A very good morning, guys. Today is the expiry day, and Brent has crossed $90 overnight. It made a high of 91.35. The trigger that we called 8 episodes ago fired in this morning, and today is the expiry. 661,000 puts have been sold by the clients, and into a third consecutive naked put book. IV has crossed almost 25% jump yesterday, and expiry IV woke today at the support. So today is the expiry day. Somebody wins at 3:30. So this is the Tanmay Edge. You are listening to episode 105. I am Tanmay Gurtaguti. Let's go. So first, yesterday we saw Nifty close around 78 points lower, 0.32% lower at 24,287. The high was 24,360 and low was 24,226. Fifth straight lower close we have seen, and the flow is 24,472 5 days ago, then 24,436 a lower one, then 24,396 another lower one, then 24,366 another lower one, and a 24,288 yesterday. A staircase down almost 45 to 50 points every day we are seeing. We'll come back to it later. Sensex is trading closed 281 points lower at 77,728, and it made a low of 77,454. VIX was up almost a percent and closed at 11.441. The breadth for yesterday was 18 stocks up on Nifty and 31 down. So almost a 2 is to 3 breadth that we saw. Sectors, IT was down 1.75%, in which Infi was down 2.66%, HCL was down 2.53%, FMCG as a sector was down 1%, Realty was positive 1.46%, Metal was positive 1.26%, small caps were green. So the broader market is still showing strength, and we'll come back to it as well in this episode. So about yesterday, bound dips went wrong. The dip sliced towards 24,227. So the 24,300 stop worked, the exit rule worked, and one thing that worked was IV got a jump of almost 25% yesterday. So direction was wrong, wall was right. So I'll take a 2 on 5 on that. Full scorecard is available on rupeecase.com. Now the flows for yesterday. FI's cash saw 2,535 crore of selling yesterday, whereas DIS bought 5,101 crore. The second 5,000 crore check in 3 sessions. That is a big one. FI index options bought 8,423 in one day. So they are buying the protection and they are buying it in full throttle. And FI's index future short grew to 1.82 lakh, new cycle high that we are seeing in this August month. So, and the crowd, the clients, you can see the numbers yourself. 5.74 lakh put short, then 6.08 lakh put shorts, and yesterday 6.61 lakh, three consecutive records in naked short put book. 53,000 puts added on Monday yesterday into a falling knife. One night before oil crossed $90. The first record burned at 24 to 266 on the 12th. They have built it twice since that point, and bigger each time. So let's see whether clients can hold those naked puts or not. And the pros or the proprietary desks of members are long 1.26 lakh calls and long 1.12 lakh puts. That means they are long wall on both legs into the expiry. So they are long calls as well, long puts as well. The IV spike overnight already has paid their book, but the loop keeps on working and they are carrying it. FIs on the other hand, puts, they are long 5.02 lakh, crossed 5 lakhs for the first time this month. FIs covered around 50,000 call shots. Even the hedgers respect the upside tail that we see. And for today's option chain, max pain sits around 24,350. That is where the expiry should happen. So 350 to 400 is that level where the max pain sits, and market is 62 points below the magnet. Support is at 24,300 with 1.35 crore puts over there. 33 lakh just got added over there yesterday. So that is the single biggest strike of the defensive bulls. Support 2 is present at 24,250 with 83 lakh calls, 83 lakh puts, sorry. Almost 50% of it, that is 43.5 lakh, got added yesterday itself, the biggest ad that we saw. And then 24,200, which is 1.04 crore, and the base still stands at 24,000, 1.14 crore. So below 250 we can still see that 200 levels, 24,000 levels hitting in, and keep a watch on that. Resistance, the first resistance stands at 24,350 with 71 lakh calls, and 31 lakh got added yesterday. 24,400 with 1.05 crore, 24 lakh got added over there, and 24,500 is the biggest resistance, that is 1.25 crore calls have been written over there. So put writers added 1 crore contracts between 200 to 300 in one day. A, a great support that has been created, and the PCR is almost flat and trading at 0.92. So expiry straddle is roughly around 125. 24,300 reference strike is trading at 131, and that gives a range of almost 160 points on both ends. That gives us a box of roughly 24,150 on the lower end and around 24,400 on the higher end. If you look at the levels simply, 24,350 to 400 is your magnet zone, and below which it is a negative gamma territory, means the moves will amplify and we could see sharp trending moves. Above it, 24,350, the market should pin around that 24,400 zone, and the wall is over the board as well, where we saw it jump 25% yesterday. So it's still around that 10 level. So the wall has subsided and the cash effect has gone down. Still 120 rupees straddle means we could see another 40 rupees of decay, 40 to 50 rupees of decay, till 315, and we could see that markets pricing in around 70 rupees straddle by 315. So if you are going to sell, be cautious. It is not advisable, as buy IV or buy long volatility is going on. And the global headwind this morning is gift nifty is flat, but Asia is melting. Nikkei is down 1%, almost 700 points. Straits is down 1.12%. Hang Seng is down 0.71%. Kospi is plus 13, positive 1.37%. That is the only positive. And US on Monday, S&P was down half a percent. Nasdaq was down 0.32%. And USD INR 95.61, the lowest that we have seen. And the oil tax compounding effect is able to be seen in the markets as well. So US 10-year yield at 4.73, gold at 4,400 off the records. The two flashing numbers that we have to see is that crude is trading at 91.16, that is above 91, and rupee is trading below 95.50. So that is both bad news for Indian markets, which may get surprised, and we will see it in the next part. And one thing before we go to the plan, all cap one of the fresh cycle yesterday was up by 7 bips versus the benchmark down by 0.32 bips. So alpha of 0.4% on day one. Rubicon up 11%, Vector Food up 6.21%, Avalon up 6.11% in the new book. So scorecard still remains CAGR of almost 48% year on year. Now the plan, guys. The battlefield is roughly around 24,200 to 400 levels. So we have got those 200 points to play for. Max pain above spot for once. The pin needs to settle down if we reclaim 24,350. Below 24,350 we see a trending move and lose that 24,250 mark, and the crowd's 6.6 lakh naked puts are the fuel, and that would cost 24,000 might get hit as well. So do not rule out a trending move today. So oil above 91 gives downside the benefit of doubt, the standing rule. The wall model says buy the IV, do not sell it, own it in a small risk. So what we are going to do, we are going to play the same direction. Still buy on dips remains, and that is where the trade comes in. So we are doing a long put spread. That means that 24,300 put we are buying and 24,500 in the money put we are selling. The spread is trading at a credit of 127 rupees. Expect it to sell around 135 to 140 with a stop loss of 160. So gives you a 20-point stop loss with a target of almost 60 points. That means 1 is to 3 trade is available, 24,300 and 24,500, expecting the markets can bounce till 24,400 as well. If at it goes below 160, then do not carry it, just exit it and stay on the sidelines. Still 24,100 becomes the first buy zone, and the final buy zone is 24,000. Keep a watch on it, keep position slide, guys, and have a happy trading. If this added value, please share it with one trader friend who needs it right now. Subscribe on Apple Podcast, Spotify, and Amazon Music right now, and stream it first on rupeecase.com, where it is streaming first at 8:30 every day, every morning. And give it a rating, guys, if you want to add something to the podcast. See you all once again tomorrow. Till then, have a happy expiry.